Thanks, everyone in the audience. Welcome to another edition of TC Live. In today's edition, we will be talking about harnessing the power of crypto investments to fight inflation. And joining me today, I have Deborah Ojengbede and, sorry, I think I disconnected for a while. Joining me today are Deborah Ojengbede and Arindam, and we'll be discussing how we can use crypto investments to further fight inflation. And just before we start and kick off into the conversation, I'd like to go over a few notes and just talk about what TechCabal is doing, what Pillow Fund is doing, who our guests are, and why we're actually here to have this conversation today. So TechCabal speaks to the business and human impact of tech and innovation in Africa through high-quality articles, reports, and events like this. We also publish the TC Daily newsletter, which is a comprehensive roundup of tech news and events across Africa. If you are not subscribed to it, the link will be posted in the chat room so you can sign up right away. And for this event, TechCabal is partnering with Pillow Fund. Now, Pillow Fund is a financial services company that allows users to earn interest on their deposited funds with a variety of products and services, while also actively solving the problem of increasing costs of living. Having helped over 100,000 users in 60 plus countries across the world hedge against inflation and its growing pangs that are slowly threatening to cripple economies globally, Pillow is set to level the playing ground for Nigerians through financial inclusion in the opportunities that lie in cryptocurrencies. And like I mentioned today, we have guests and panelists who will be speaking to us on the topic we've highlighted. And first off is Arindam Roy, who is the CEO of Pillow Fund. Pillow Fund. Now, Arindam is the founder and CEO of Pillow Fund, and he fondly calls himself a crypto nerd. Prior to Pillow Fund, he was previously working on building consumer software and financial products at Hyperverge and Shopee as a product manager before embarking on his mission to bring crypto to the masses. Welcome, Arindam. How are you doing this morning?
Hi, Timmy. Good morning. Thank you for the wonderful introduction. I do call myself only a crypto nerd because I believe since I have transitioned to crypto, a lot of the work that I did before crypto may no longer be relevant. So I keep that on my profile. But yeah, I have about 8 years of background in software engineering and product management. I have built and led teams in Guangzhou, in China, in Indonesia, in Singapore, and in India. And have led product for teams in the US, teams in Latin America, before starting my journey in entrepreneurship and in cryptocurrencies. I've been in crypto since 2018, so this is my, I think, fourth or fifth year. Have been through multiple cycles, contributed to many DeFi protocols and projects and so on and so forth. Was an early contributor to a lot of the fundamental building blocks of DeFi before starting to build Pillow. Pillow now is a team of about 75, I think 75 people. We serve about 150, 200,000 users worldwide. We serve over 75,000 users in Nigeria today, and slightly larger across Africa. And yeah, just really excited to be here. Thank you very much, TechCabal, for putting this event together. And you guys have done a great job, and I very much look forward to the conversation with Deborah and Chris today.
Okay, you truly are a crypto nerd, and I'm sure we'll get to hear more about your experiences with crypto during the discussion. Next, we have Deborah Ojengbede. Deborah is the CEO of AFEN Blockchain Group. In addition to this, she has over 5 years of banking experience under her belt with a diverse background that includes strategy and innovation, business development, and women banking. Deborah's culminating experience is now being utilized to drive blockchain adoption in Africa through innovative Web3 protocols. Welcome, Deborah. How are you doing this morning?
Doing very great. Thank you, Timmy. Thank you for having me as well.
Do you have a nickname to have? Should we call you the blockchain nerd or the banking nerd?
You can call me Debbie.
Okay, all right, Debbie. Last but definitely not least is Chris Annie. Chris is the CEO of DABA, and he is an insightful teacher, author, entrepreneur, cryptocurrency trader, and investor. He is the CEO of Digital Abundance Limited, a budding consortium that passionately uses the internet and emerging technologies to drive global economic revolution and social change. He's also the founder of DABA, an online school platform which teaches people how to gain financial via in-demand and high-income skills over 50,000 students. He is passionate about education and entrepreneurship and uses both as tools for alleviating poverty and creating economic prosperity in Africa. Welcome, Chris. How are you doing today?
I'm fine. Good to be here.
All right. Thanks for all our guests joining us. And right before we get into the conversation, why are we here today? Like I already mentioned, the topic is harnessing the power of crypto investments to tackle inflation. And I'm quickly going to go over a presentation that talks about the importance of this topic. And the presentation was put together by our TechCabal Insights, which is our data and research insights arm. So an overview of cryptocurrency in Africa. In the past years, cryptocurrency adoption has increased in Africa. Last year alone, between June 2020 and June 2021, over 105 billion worth of cryptocurrency was received in Africa and was traded. This shows that more and more Africans, just since the pandemic till last year and even up to this year, have been trading in cryptocurrency, and we've seen increased cryptocurrency exchange. And this, of course, has led to different things. We have a proliferation of crypto exchanges, crypto startups that have been launched over the past couple of years. In Nigeria, we have Bundle, we have Usha, we have Pillow, and we have Quidax. Ghana has seen the existence of Bit Africa and Bitsika, while in Kenya, you have places like Raise and Binkabi. And in South Africa, there's Revix, there's Bitcoin. There are a lot of these crypto exchanges now helping people facilitate crypto trading and cryptocurrency in different countries. Now, regardless of the fact that Africa only makes up about 2% of all cryptocurrency transactions, we also make up the highest rate of P2P services in Africa. While P2P volumes account for a tiny part of all cryptocurrencies, no other region uses P2P services at a higher rate than African crypto users. Peer-to-peer trading is what we call, for those who don't know, P2P means peer-to-peer trading, and Africa presently has the highest rate of P2P trading across the continent. And what does this mean for people? What does this mean for the continent as a whole? What are people using crypto to do? Here are an array of structural factors that are driving quick adoption of cryptocurrency in Africa. Lack of accessibility to financial institutions, which includes banks. People don't have access to banks, especially people in rural areas. Then, of course, increased user education, devaluation of fiat currencies. We have high costs of cross-border transactions, use of P2P platforms. All these factors have led to the increase of adoption of cryptocurrency in Africa. And today we're going to talk furthermore on how we can use this increased adoption to tackle inflation. As everybody knows, inflation across different African continents has continued to soar over the past 2 years. In Nigeria, for example, last month in October, I think our inflation rose to 21%, like about a few percent increase from September's 20%. And in Ghana, it's up to 18% right now. So across the continent, inflation is continuously increasing. And for people that are earning the same amount that they've earned pre-inflation, it means that they can buy less and do less with their money. How can crypto help us do this? This is why we have brought together this conversation. And this is what Chris, Arindam, and Deborah and I will be talking towards today. So I'll kick off the conversation right now. Welcome, guys. Welcome again. I'll jump over to the first question and I'll throw this to Chris. In 2021, Africa was ranked as the third fastest growing cryptocurrency economy. How far would you say we've come as a continent when it comes to crypto adoption?
Well, I'll say fair enough, considering all the economic and regulatory restrictions we still have in Africa regarding crypto. If you check technology-wise, Africa is still not there technology-wise. But seeing the few or the kind of numbers and the kind of volume we've actually seen in the cryptocurrency industry coming from Africa, I think I will just rate it fair enough. Because if you still see, like I said earlier on, our response to technology in general, there's just a group or a particular sect that is actually just interested in this thing called cryptocurrency. And that may just be some kind of limitation for general adoption like that. Well, if I'm to give a mark, if I'm to give an overall assessment, I will use fair enough. Africa has actually come back fair enough in cryptocurrency adoption.
Okay, Thank you for that. Arindam, one is for you. So Chris has said that we've come fair enough in cryptocurrency adoption. And of course, as everyone knows, crypto is widely used as a means of making payments. Beyond making payments, what other interesting use cases do we have for cryptocurrency?
Right. Thanks, Timmy, and thanks, Chris, for setting the contest. So one thing I love to do before I start speaking is ensuring that everyone is alive and well. So thank you everyone in the audience for tuning in. If you guys are listening to us, drop a hi in the chat so we know we are not talking to just talking to each other. But Timmy, to answer your question, see, fundamentally, I believe just a little bit of history, right? The banking system is not that old in terms of just existence of humanity. We were using cash till very recently. Almost everything was cash. It is still today, till very recently. We have this centralized bank transfer, payment-based solution, which is maybe 50 to 75 years old, where everything got sort of super centralized, and centralized banks came out and they had all of their processes and boundaries and border control. But for most of our lives, and if you just talk to your grandparents, things were always peer-to-peer and permissionless fundamentally. So we're just returning back to what worked for us to begin with, right? So as Chris has already mentioned, payments are great. For example, the other way I look at it is that, optionality for individuals, right? Today, if you don't like in government, you can vote it out. If you don't like living in a city, you can go and live in some other city. But if you don't like your financial system, there's no way out. For example, if you live in Nigeria, you must exist within the Naira economy, whether you like it or not. There's no option out of it, right? So the borderless nature of cryptocurrencies creates for these interesting opportunities for retail users, right? Think about you just getting access to raw US dollars, for example, or getting access to British pounds, or getting access to equities of some other country. These are traditionally fairly transparent industries, but because of, let's say, capital controls and local restrictions, become very hard to access. Now with things like stable coins, and then potentially now that I have stable coins, so then the ideas keep coming, right? For example, with Pillow, something that we're exploring is that if I can custody US dollars in a bank account and create a stable coin, let's say USDT, then why can't I custody US equities, let's say Google stock or Facebook stock, into a treasury account and then create similar tokens, stable equities, right? And then if these are freely available in the market, let's say over a DEX protocol or over an app like Pillow, then people can simply trade in and trade out between US equities, right? There are apps today in the market that do that. There's 1 to 2% commission, things like that. Similarly, simply having access to stable coins makes it a great avenue for savings and investment that's protects you against inflation. Similarly, if you just look at peer-to-peer transactions, right now in Nigeria, to move money between dollar domiciliary accounts, for example, one account to the other can cost you anywhere between $10 and $30, depending on the size of the transaction. But for example, on the solutions we work with in some other countries with Solana Pay, it costs 1/100th of a cent to send dollars from account A to account B, right? So, and now that USDT, so we don't fundamentally realize this, right? But the massive change is that everyone has accepted that USDC and USD, for example, are the same thing. So it's money, right? So now I can build transaction layers, investments layers, saving layers, all sort of replacement of banking layers that can be borderless, permissionless, cheap, efficient, and transparent and reliable at the same time, and make them accessible to African users, right? Because Africa is probably the most affected continent by capital controls, very, very, very disconnected when it comes to accruing benefits from the global economy, but very, very exploitative when global economies come to get resources out of Africa. So this can fundamentally level the playing field is what I feel.
Thank you for that. I think brilliant outline for that. Deborah, I'm going to come to you now and go back to something Chris and even Arindam hinted at earlier. Chris said that a very, very limited amount of people are actually using crypto on the continent. So what are the challenges that are limiting the adoption of cryptocurrency, the mass adoption of cryptocurrency on the continent? And how can crypto businesses tackle these challenges?
All right. Thanks for the question, Timmy. So just to reflect on the insights that you shared at the beginning of the session, I mean, it makes a lot of sense that there's a lot of usage of cryptocurrencies in Africa. And that's because it's emerging markets such like Africa that need the blockchain and cryptocurrencies the most. But in terms of a few challenges that are affecting widespread adoption, I would say the knowledge gap is a very huge issue. I mean, a recent report on Luno shows that over 50% of Nigerians do not know anything about crypto, about 55% in South Africa, 64% in Kenya, right? Those are huge numbers. And so in terms of how far we've come really as a continent, I believe that we're still early. Even the crypto space in itself, in general terms, is pretty early. But however, we should expect to see more adoption as a lot of structure comes into this space, and even cryptocurrency constantly solving a lot of issues. So in terms of challenges, I'll say the first thing is knowledge gap, because education is very essential to driving participation. You can't adopt what you don't understand, right? And then another thing that I think we don't talk about enough is trust. Yes, we're preaching the gospel of decentralized finance, open ledger, etc. But how are we working towards protecting investors? If investors feel safe, I think that it would really, really help in driving some more widespread adoption. So for me, those are the two major challenges that I see that are, very, very common: education and trust. But I mean, for trust, I would say that I see a lot of structure coming to the space. I see the SEC releasing licenses like the VASP, DASC, virtual asset service provider licenses, etc. So, I mean, it's just only a matter of time, really.
Thank you for that. Arindam, let me come back to you quickly. Deborah mentioned trust, and like she said, the crypto ecosystem is still relatively new, and there's much skepticism about it due to uncertainty. How can companies navigate this to build trust in the minds of investors and other stakeholders?
Right. So to me, I have pondered about why education is so important around cryptocurrencies to drive adoption, right? And my belief is very similar to Deborah, but slightly different. People don't seek out technology. No one seeks out technology for seeking out technology's sake, right? Whenever anything new comes, people seek things out because it solves a problem, right? So I believe the true key to adoption of cryptocurrencies for good, right, for good reasons in Africa will be for non-speculative reasons. It's not because some token is going up or some token is going down, so we should invest in it or not invest in it, etc. But I believe it will happen because it will solve problems. It will solve payments. It will solve participation in global economies. It will solve rewards. It will solve integration with regular banking services. If we look to be able to drive adoption. If you look at Latin America, for example, a very similar economics. The largest bank, their new bank, NUBANK, they run their entire loyalty program, the bank's loyalty program, on the Polygon blockchain. Now that's 30 million people onboarding onto cryptocurrency in one go, in one attempt, right? So if you solve a real problem and integrate into the systems for non-speculative reasons, right, which does not always involve trading or investing, then people will come to you because you solve a problem. For example, if Timmy wants to send Deborah $10 and sees that his domiciliary account is asking $8 as fees, but the Solana blockchain or the Ethereum blockchain is asking 10 cents, then he's going to figure out how to get stable coins to send them to Deborah. And that's an organic way of how you onboard people. People started using digital banking apps like Kuda or things like that because they were just tired of going to the ATM. They were just tired of going to the POS machine, right? It was just too cumbersome. So we have to start solving non-speculative real-world problems and driving education and influence users to try and use the solutions to the problems that we are solving. And the adoption of cryptocurrencies will be an outcome of that.
Okay, that makes sense. Chris, it looks like you want to chip in. Like you wanted to chip in while Arindam was speaking.
Yeah, I was actually flowing with his point, talking about the non-speculative reasons. You see, the truth is in Africa, we got to know about, just like what this topic is about. You see, one of the biggest use case for crypto or I'll use one of the biggest untold big thing that crypto has done for us in Africa or Nigeria is an exposure to a dollarized economy. We do not talk about this enough. I know how some of us have tried to. The first time I used crypto in Nigeria to do a major international transaction, that was the day I said bye-bye to Nigerian card system. I personally don't have I don't have a domiciliary account in Nigeria. The one we even have for the company is empty. I don't know the last time I used my personal card to do some kind of payment and transaction, because I still find a way to escape the Nigerian system and send money in crypto to someone who uses PayPal to make payment for me while we replace the payment with crypto. So, and the person is not in Nigeria. And so there was a time like that I was supposed to do something in Dubai, and I needed to make payments for hotels and some things. And I had this platform, like an Airbnb platform, that we had to make payments with. And okay, so that day I was trying to use my card and they kept on blocking some years back. And so I wasn't, even the $100 policy wasn't there yet. Talk more of talk less of the $20 policy we have now for our Nigerian cards. And the whole thing kept frustrating me. I couldn't do OTP, I couldn't do anything. And the next day I saw the option for I could use my card, I could use my crypto to make payments. But the next thing I even saw a loyalty reward for using crypto. And so the next thing I did that, it worked. I had to call like 3 of my friends. And that day we did hotel transactions, we did hotel booking transactions of over $4,000 that period. So just me seeing one thing work, my friends also came in. I got referrals because I helped them in booking their hotels and I paid with crypto and all that. So I resonate with what he is saying. But you see, at the end of the day, we first need to appreciate that crypto gives that African user an exposure to something he doesn't get from his regular banking system. You have your protection of you using your USDT or your stable coin at your own time. You have that exposure to a dollarized economy. If you have someone who has kept money, I have some people who work with me in my school, DABA, and what they do is that when they receive their probably affiliate commission, their royalty, guess the first thing they do? They change the money from Naira and they take it down to their wallet in USDT so that, you don't know the next thing that will happen to the Naira. And so the next thing they do is that as they keep keeping the money, you now see someone tell you 6, 7 months ago, 8 months ago, 9 months ago, I had this amount of Naira and I converted it to USDT. And back then the dollar was $500 per USDT. And now today I'm seeing the same thing at 800. So that area or that use case for an average African user is really not talked about enough. And this has really helped us escape a lot of currency devaluation. And I think that's even one of the major things, or this is more of the highlights of this conversation we are having today that has been organized by TechCabal. So that big thing, that big use case about exposure to the dollarized economy, it's also something that I think the Africans first had to see. And if you talk about saying, what about other non-speculative use case? You see, it's a whole different conversation for Africa. I will not lie to you, because we are in that economy that even the guy who drives your Uber or who uses Uber tries to come and pick you, he's still having challenge on using technology. So I think that we still have some problem. I will add to what Deborah has also said. We will still have some problem with this thing called crypto, because to some people, I've been in crypto education since 2016, and I got to a level in 2021. I said I'll stop forcing crypto on people as I got, because there's been an argument way back 2017 in the crypto community about should really poor people come and use crypto. It's a very controversial conversation, because see, for you to use crypto, there must be a bit of IQ for you to say you really want to really understand that a transaction has to go between this blockchain and its P2P without the need of a central bank. When the normal thing you know how to do is that, see, I must keep my money somewhere, then there must be a regulator somewhere that must help me hold that money. And if anything happens to the Zenith Bank, I know Jimovia. But if anything happens to Bitcoin, you don't want to be calling the Bitcoin CEO, because there's no CEO for Bitcoin. There's no customer care line for Bitcoin user who is holding Bitcoin. And probably if you make a mistake with self-custody and probably you send your BTC to a wrong address, you don't have a law firm or a customer care line you say you want to call. And so you want to do the same thing for banking. Even if you put money into a wrong account, you can still use the law, or go to court or get a court injunction or get a court order or call the bank and say, I did a wrong transaction. And finally, you find a way to do that. So there's still this technical know-how. There's a big gap in technical know-how. Some people still don't know how to use things like Google. Some people still don't know how to use things like their Google map to help you get a location. And somebody who is an Uber driver is asking, where's your location? Meanwhile, the solution is already there. So I think that these things are also some of the limitations that people will still have in using cryptocurrency. I also do think that naturally, people still fear new technology, especially when it has to do with money. Truth be told, some of us are comfortable with the risk of crypto to an extent because we've actually taken our time to study, practice, lost, made some money, and we now know that this is how the system works. I remember there was a particular time when one of the reasons I stopped using a normal HP computer back then was because we used to have this virus clip that used to come on your blockchain wallet. And there was a time I had an attack like that where I was trying to send money and the thing swapped the wallet address I was supposed to send to. And that's how I got attacked and I lost that amount of Bitcoin I was sending to someone. People still fear this thing. Now, you now talk more about some of the recent news price crash that people now hear in Africa about crypto. Truth be told, some people still see crypto, no matter how you try to explain it, as Chris is telling you to bring two people, that will bring two people, because of we are too used to Ponzi schemes. We're too used to multi-level marketing systems. We're too used to anytime somebody is telling you something about money, about a new technology, you're saying, oh, don't mind them. Let me use the broken word you use. Not them. Bring two people to bring two people. Okay, that will bring three people. Then the next thing, there's Ponzi scheme people who they've told you, okay, if you put $100, they just buy $100. And the next thing, the average Nigerian person, the average African man doesn't want to lose his money. He doesn't want to hear the $100 I put in Bitcoin or in Solana or Ethereum today is not.
But Chris,
he'll tell you.
So like now, I actually like the direction you're taking now. So right now we've seen that we've agreed that crypto adoption is low, yeah, and we've seen that there's been a recent increase in crypto debacles that have reduced people's trust. How can we still convince people that they can use crypto as a hedge against inflation in light of this instability we've seen in the market? And I'm looking for responses from both you and Arindam for this. We've seen that people are talking about crypto problems and crypto crashes. How can we still convince people that crypto can be a hedge against inflation?
So time proves a lot of things. Time proves, I remember in 2017, we were talking crypto and some people on Facebook, on social media, some internet marketers way back then, because I had a lot of them in my circle. They kept on saying, these things you guys are doing, it doesn't make any sense. It doesn't make any sense. You see, just like Deborah said earlier on, we will not stop in simplifying education. That's no matter how you want to put, we'll not stop in simplifying education. And I think that this time, mixing it with what the Pillow Fund CEO guy is saying too, we'll try to do that education and try to expose it to something that is not speculative. So we're no longer going to be saying things like, when you come into crypto, you get rich, or next 5 years, you buy investments, you hold. We simply tell them, see, I think that this is one of the easiest way for you to escape your currency devaluation problem. what brought me into crypto initially, the first video I watched about crypto that convinced me was not about Bitcoin is going to $50,000. It wasn't about Bitcoin is going to $20,000. I bought my first Bitcoin at $600. And in 2016, what convinced me was Andras Antonopoulos was speaking to a group of banking executives, nerds, programmers, different people from all walks of life. And he said, see, for the first time in history, we have a technology that through our phone, you can send money from Brazil to a remote village in Ghana without the need of a central bank. That alone was a big use case. I said, what is this thing? And I kept on studying about Bitcoin, the P2P, Satoshi's white paper, and all he said about Bitcoin being something that you can trust without the need of a bank, without the need of a government. And I said, and it can be seized, it can be frozen, it can be, and I said, wow, what's this thing? And that was what led me into the rabbit hole before I now even knew that a time will come that I could be trading these same assets for more gains. Truth be told, while the P2P thing brought me in, while the you can't freeze it, you can't seize it, while I can use it to send money from a remote village somewhere to Brazil or any part of the world, while that was the major key point that brought me in, I wouldn't lie, that the asset appreciation was also one of the things that also kept me in too. And it was part of the thing that kept the whole thing exciting. But I think that if we start with this type of education, come use this technology, come get exposed to a dollarized economy, come look at the entire thing that is going on. See, during COVID, there was this copywriting this I used to use to tell people to come and learn crypto in my school. And I said, imagine if you're a civil servant in Nigeria, and in 2016, you were earning the minimum wage for 30,000 naira. And back then, the dollar was 360 or so. If you divide 30,000 divided by 360, it will give you about 90 something dollars. The minimum wage today has not changed in Nigeria. And so if we do 30,000 today, if I'm correct, divided by 800 naira, which we set $800 naira per dollar, which we use for exchange rate today, what you're getting today should be, I think 30,000 divided by 800 should be about $20 or $30, $20 something dollars or $30. In 2016, you were earning 90 something dollars. In 2022, you were earning about $24 or $30. Your currency value, your holding power, your monetary value for the same effort you're putting in the civil service work has reduced by 3/4. And so if you consider that alone, it's another reason why you should consider things like USDC, USDT, which is an alternative. I think that if we give them this education this time and tell them where this is also going, and of course, accessibility, the DOM account is not safe. You could wake up tomorrow and they're telling you this and this, your bank account is not safe. So what's the thing you should do? You should learn self-custody. You should learn to use platforms where you can domicile your Naira and convert it easily to USDT or USDC. I think that when they get access to this pain point, this thing that pains them and affects them, I think that with that, you just used to, when people tell you to come to church for the first time, they can tell you they can use one message to bring you in. And from you being a casual new member in the church or in the organization, next thing is you're in the choir. Next thing tomorrow, you may even be a pastor. So I think that it's the same strategy we can use for the normal person who just uses a phone, a banking app, technology, who is also facing the challenges in Africa. So by the time you bring them in and tell them, they start with this, before you know, the person wants to press something in the wallet that does buy and sell. The person wants to do send and receive. The next thing, the person is going into that rabbit hole. And I think from there, the person becomes a long-term.
Yeah, and it becomes like you, and he probably also founds another company. Arindam, what about you? How can we convince people that crypto can be used to hedge against inflation?
Right. I think, it's not the fiduciary responsibility of cryptocurrency entrepreneurs is not convincing, right? No one convinces you to invest in the equities markets or in forex markets or anything. You seek out those assets because they solve a problem for you. So I think the industry is actually, although it's still young, it's not so young that we'll still. I don't think digital asset entrepreneurs should any longer be in the convincing mode, because the asset will gain respect when the demand to sell the asset will go lower than the demand to just seek an asset, right? Like no one is right. You will never hear the CEO of Google come and ask you to buy Google stock, right? So I don't think it's we have to convince them that it's a hedge against inflation. I think what works is education around data, right? Hard data. For example, acquiring USD through banking channels in Nigeria, the average turnaround time is 3 to 5 days, and the average cost is between 0.2 and 3.5% of the amount that you want to purchase, excluding capital controls. With that, you have to spend $20 on a transaction cap and so many other things. But on the other hand, cryptocurrency can do that much better, right? With things like stable coins, and then you solve a bunch of problems around that, and then you see that people have gained some benefit, right? For example, a lot of people, the most common behavior on Pillow is that people save like 3,000 naira a day, right? They save that for every day. So now we have people on the platform who have been doing this since they could buy dollar in the market for like 550, right? Today they are selling it for 820, 830. So it's visible to them that it was an inflation hedge. And at the same time, you see the thing about inflation is that you don't have to educate them. Nigeria, Kenya, Ghana are very import dependent countries. There are no iPhones being manufactured here, no clothes, right? Most of it is imported. Apart from food, it's all imported. So the prices go up fairly quickly because these are extremely import dependent economies. You don't have to wait for inflation to tell them that inflation is happening. It's happening in front of you, right? So it's fairly evident. So just educating around things like, if you would have saved 1 million naira to purchase X today, you can't do that because this has happened to you. Here's an alternative, but then leave the decision for them to figure out whether this is the right choice for them to do, right? Fundamentally, that's the approach that we have taken. We have taken at Pillow. It's also the reason why uh, I do not condone of practices like, buy Bitcoin for 10% off or something like that, right? Because we're not selling a commodity. It's not a commodity, it's not a product, right? It's financial services. So we have to start holding ourselves with the same esteem as banks, non-banking financial corporations, traditional financial institutions, while realizing that our technology is far superior in general. The argument is simple, right? A peer-to-peer transaction between Timmy and Roy is always going to be faster than a transaction between Timmy to a bank and then from a bank to Roy. That's all. It's 3 versus 2. So that then tells me that we'll have a more efficient financial system. Now, how do you make use of that? Keep solving problems. Money does 4 things. You can save it, you can invest with it, you can borrow against it, and you can spend it. Save, invest, borrow, spend. 4 things. All 4 of these become better with digital assets. So solve these 4 things, and I believe people will seek the solution out for us without us having to actively go and sell the solution, right? So I think the first 10 years, 2008, 2010, let's say to 2020 was the selling era, but now it will be the seeking era where entrepreneurs hold themselves in high regard and build solutions to financial problems in these countries, and that will lead to adoption. I also believe the mentality of having to convince people that this is a good thing actually comes from developed economies. A simple example, right? If a platform that says I pay 5% yield on USD operates in, let's say, UK, right? Or in the US, right? They're competing against their own bonds. They're competing against corporate debt, municipal bonds, and hundreds of other USD options in their country. Additionally, they earn salary in USD. So there you need selling. In Nigeria, the dollar inflates 20% year on year against the naira. What do we have to sell? There's nothing to sell. It sells itself. Just build good products, non-speculatory, transparent, cheap, high quality financial products, products that work on cheap mobile phones, on 3G networks, and work till the end of the line. If private entities can come and build M-Pesa and USSD, why can't crypto entrepreneurs do the same? Do the same thing, people will come to use us. We don't have to sell like the entrepreneurs in developed economies because their users are spoilt with options. They have thousands of investing options. They have education around investing. They have education around saving. They have education around taxes. We have none of that. So we are trying to create an economy from scratch. We are not competing against anything else. So we need to shed away the mindset of having to sell aggressively to convince people this is useful for you, and just build good products, because unlike these developed economies, no such products exist in the market today, especially emerging markets. So if you just build good products and sell them with high ethics, high transparency, and good degree of usability, then people will come and use it. That's what I believe.
Okay, all right. That makes a lot of sense. It's very, very brilliant. Deborah, I want to come to you now. And just for everyone in the audience, if you have any questions on what our guests have spoken about, please drop them in the Q&A box and we'll get to it in a couple of minutes. Deborah, over to you now. We've spoken about the different and interesting use cases for crypto, but what are the other interesting use cases for blockchain in the crypto market that we are not actively exploring?
Yeah, thanks for the question. I mean, with crypto, beyond, cross-border payments being easier, faster, we've seen that, I mean, you would also see that most Nigerians, for instance, where I'm from, would rather invest or save in stronger currencies like the US dollar, to hedge against currency devaluation, which on its own is store of value, and crypto gives you easy access to that. Some of the use cases that I think that we don't speak about also that the blockchain offers is voting systems, governance. I mean, imagine a country with its budget on a distributed ledger technology. These are areas where we need transparency the most. I mean, in terms of crypto use cases as well, I mean, beyond just using crypto for payments, you could use crypto for investments to hedge against inflation, as Chris already mentioned earlier, because I mean, the truth is, inflation in its own is just declining purchasing power, right? So instead of having your money is just sitting down and wasting its value, or losing its value to inflation, why not put it in something that helps to grow the value of that money? And that's where investment comes in. I mean, there are several forms of investments, bonds, securities, stocks, etc. But I mean, since we're talking about crypto, so investments is one, savings as well. There are a lot of savings products as well in the crypto market, just like you have fixed deposits in banks. So there are a lot of amazing use cases that cryptocurrency presents, in addition to it being a very easy way to carry out cross-border transactions. And then there's the technology in itself that helps with a lot of transparency. So I think those are some of the use cases, other interesting use cases that the cryptocurrency and blockchain technology offers. Okay.
Arindam, let me throw that question over to you as well. What interesting use cases are we not actively exploring? Do you agree with Deborah? Do you have other use cases?
Right. No, I absolutely agree with Deborah. But to add, see, a blockchain is just a publicly visible database that everyone agrees upon. That's it. Fundamentally, it's consensus. We have a government and a president and a prime minister because there's consensus. We all voted. Transparently or untransparently, that's different. But there is some consensus that this guy should be our prime minister, and so he is, right? So now we have this publicly visible database that can be used to do a lot of things, and financial transactions is one way to do it, right? So the fundamental concept of a blockchain transaction is, how do I know I sent Timmy $10. I send it on the Ethereum blockchain. Then there are like a million validators in the world, all of whom check the cryptographic proof and said, okay, looks good. So now since everyone agrees, I can't lie and you can't lie. You can't say you didn't get $10. I can't say I didn't send $10. Or I can't send $15 and so that's it. So now if you just use this and say, okay, what other information needs to be publicly available transparently, but it's not. For example, simplest example, if you go and ask your bank for a loan, right? What's going to happen? They're going to ask you to give you all of your for a home loan, right? You bought a house, you want a mortgage. Now to get that mortgage, sorry, am I still audible? Hey,
Hi, I think I dropped off for a bit. Yeah, I can hear you.
Yeah. So let's say you go and ask the bank for a mortgage. Now to get this mortgage, the bank is going to ask you to submit all of your bank accounts. Then they're going to ask you to submit all of your stock accounts, any other assets you own, any other house accounts, etc. Then they ask you for all your liabilities. Do you have any other loans? Did you borrow money from any app, anything? And you have to find all of these proofs of all of your assets and liabilities and submit it. However, if you put this on the blockchain, then you say, okay, here is my unique ID. You can query and fetch all of my assets and liabilities from a Merkle tree proof of reserve, and you can tell me what my loan interest rate is, right? So even in traditional finance, right, just having account aggregation, right? Aggregation of all of a person's assets and liabilities. Today, no bank wants to talk to the other bank. Right? There is no incentive for GT Bank to give its information to Access. And Access doesn't want to give this information to GT. But if you say, okay, a mutually agreed data structure, everyone's data sits with them, but it's on a blockchain. So as and when it requires to be fetched and there's a valid reason through a transaction, I can do account aggregation, right? So that when you apply for a loan, it can be completely paperless. The bank can see all of your records across every financial institution in the country and decide whether you're worthy of a loan or not. One example. Second example, there is so much scrutiny around finance. There is no scrutiny around health. If I go to a hospital saying I have a fever, the doctor gives me a medicine. The doctor has no idea if I'm allergic to that specific medicine or not. So there is no medical history. Medical history can be put on blockchain. And again, hospitals and agencies don't want to talk to each other, but they can all put it on chain so that when a new doctor evaluates me, he can pull up my entire medical history, every record. What allergies do I have? What previous procedures have I gone through? Any potential complications before suggesting anything to me? This can be life-saving, right? So fundamentally, the technology is just a database that's publicly visible that everyone agrees upon, right? Third thing, geotagging. Nigeria imports a ton of fruit, right? Fruit can be tainted, right? So once fruits, any supply chain, for example, right? It goes through evaluation practices. This is all put. Either we're signing on paper saying this food looks okay to import, etc., and then it flows to the customs. It's completely offline. It's terribly decent. It's terribly inaccessible information, and you don't know what you're eating. Where did it originate? Is it safe? Is it not safe? All logistics data, all transport data can be put on chain, so that I know when I'm eating something, buying something, where did it originate? What quality checks did it go through? What are the results of this? And these are again vastly different systems, right? Like the practices that like a big supermarket uses for food safety can be very different than say some local restaurant. But then again, I can fetch this data and a restaurant can ensure that it's not like buying tainted fruit and its customers are going to fall sick and sue them. So if you just start thinking, okay, a transparent global database that's available for everyone and can be decided what data goes in by consensus of everyone, then sort of these non-financial use cases also come in, right? Because this is basically removal of error through consensus. So this will, wherever data needs to be precise and public, healthcare, transportation, logistics, safety, right, finances, right, which is the primary use case we're talking about now, we can use a blockchain database.
Okay, thank you so much for that, Arindam. We're going into the Q&A session now, and I see that we already have quite a couple of questions for our panelists. I'm going to, right before we start, my colleagues will drop a poll. They will start a poll. A poll is going to appear on your screen now. So please help us fill that poll if you're on this session. fill the poll and just help us understand how we're doing so far and how your understanding of crypto and blockchain works. So the first question I have here is, given the volatility of cryptocurrencies, how do African investors mitigate the swings and its effects on store of value? Does anyone want to take this? Deborah, maybe?
I mean, I think I'll still go back to, understanding the market. The crypto market is highly volatile, and to be able to navigate, you just need to understand how it works, basically, because if you don't, you're not going to make it. That's just the truth. Yeah. So getting into the crypto space, not just even understanding how cryptocurrency works, but what are the other factors that affect cryptocurrency. I mean, what are the macroeconomic factors? How is, the global economy even affecting, or how are impending regulations dampening investor sentiments around the world? So it still all goes back to really understanding and being aware of everything that's happening in the space. It's a very new and early space, and also rapidly growing. So you need to be well informed at every point in time. That way you're safe. And I mean, I always say this, and this is just, in my own opinion, it's also safer to not be too exposed. I mean, diversify your funds, not putting all your eggs in one basket, as people would say. Diversify, do not get too exposed, always have, emergency funds, etc. I mean, it all just goes back to, just being very, very careful, and also understand the space that you're playing in, and then, I mean, you're good to go.
Okay. Arindam, Chris, do you also want to chip in?
For crypto invest, okay.
Go ahead, Chris. Please go ahead.
Okay. For crypto investing, it's really, really a dicey situation, because, there's always the bull market, there's the bear. And even in the bull market, we've had situations where even people still didn't make that kind of money because they still lack knowledge. But beyond the whole thing about lacking knowledge, before anyone will go to put his ₦1 because he wants to invest in the cryptocurrency market, the first thing I tell people is to get that knowledge. For instance, someone like me, I offer people crypto trading courses that I sell at DABA, and I emphasize the place of learning. While we emphasize the place of learning as an investor, you should also know that there's something called risk management which is part of the things I still teach and we still share. And at the end of the day, you considering what 2022, for instance, as brought for us in the cryptocurrency market, the way any African or anyone wants to get that is depending on your risk appetite, your skill in the market. If you're just the one who wants to speculate, buy and hold, but you're the person who wants to trade actively, or you're the person who wants to, and in trading, you have different kinds of derivatives, sports, and all those things. So it all depends also on your risk appetite and what you can afford, and say, okay, this will happen. So many of us have taken some beatings this year. We've also had some good gains too this year. And it's not really 100% dicey. I'll say, okay, well, this is how everything's going to work out. For instance, I put out a tweet yesterday about some tokens in the cryptocurrency market that has actually performed well in the past 6 months, or even in the past three months, 90 days, 30 days. Assets like Matic, if you're holding assets like Matic in the past 180 days, I'm sure you'll be like 50% up in just holding Matic. Matic has been a good performer. The likes of BNB, if you're holding your money in asset like BNB in the past 180 days, I'm not sure you would be more than 1% down in prices. And of course, if you now assess it in the last 30 days, in the last 60 days, there's something about 20-30% up. Same thing for crypto assets like Litecoin, okay? And so it's still, like I said, it's still a dicey situation. There are some assets, if you're just buying and holding, they did not perform. For instance, if you've been holding Bitcoin for the past 6 months, of course, you should know that it's been a downward trend. It's been a negative return in asset, even in the past 1 year. But guess what? In the midst of all this, if you've been hedging all your crypto assets with BNB on BTC pair, I don't think in the past 1 year your investment would have done bad, because at the end of the day, BNB seems to be like the best performing crypto assets against BTC. If you look at it on the 1 year time frame, and it's actually excellent. If you look at BNB performance against what we call Satoshi value in BTC, in the past 1 year, BNB has returned 70% against BTC value. We call it Satoshi value. Okay, so in the midst of all the market crashes, in the midst of all the volatility, there's still some crypto assets that have actually proven that, holding in the past 6 months, in the past 90 days, in the past, same thing, even things like XRP, in the past 180 days, holding our XRP will just give you a simple return of just 1%. So there's no loss. It's either you're breaking even and all that. So find a way to make sure you're knowledgeable enough, manage your risk, know the kind of losses you're ready to take, and know the kind of losses you can stand with. But truth be told, at the end of the day, I used to say this, that markets are designed on the long term to go up. This has been evident. This has been seen in the stock market on its own. So the market cap we had in 2008 financial crash is not the same we have after 10 years, after 8 years. We've always seen an upward trend. And so it's the same thing we're going to see even in the cryptocurrency markets. While the market capitalization may have gone down, on the long term, we're still going to see an upward trend. The question now is, which of these assets will I be able to bet on that can actually give me some kind of returns 1 year time, 2 years time, 3 years time, and all that?
Okay, thank you very much for that. Our poll is live now. So again, a poll is going to appear on your screen. Please fill the poll and help us understand how the world is seeing crypto right now. There's another question here, which Ijoma Igionu. Ijoma, do you want to answer? Do you want to ask your question live? I can allow you to unmute your mic and you can ask your question live. Let me see if I can. Where's Ijoma? Can we bring Ijoma up, please? Hi, Ijoma. Okay, so I'm just going to ask her question here. Okay.
Hi, can you hear me?
Yeah, I can hear you now.
So my question is, if trading crypto can be a person's day job, like the person would be like, I'm a crypto trader, and that's his hustle, his or her hustle. So I want to get insight on, okay, can we trade crypto to survive? Yeah.
Arindam, Deborah, I see smiles.
I think that question is for Chris and Arindam.
Idioma, the short answer, the shortest answer from me to you is no. The longer answer is this. The reality is that about 95% of people lose money trading. Any asset that's not related to crypto, any asset globally. If you're trading intraday, which means starting, opening and closing positions on the same day, there's a possibility that an early trader, there's a 95% possibility you will close the day in the red. This is not an indictment of the fact that trading cannot be possible or cannot be profitable. Absolutely, it will be. It's just that it's going to take so much effort to get to a point where 60 to 65% of your trades will close profitable within the day. The amount of effort you will have to put you might as well rather do a job. So I would ask myself these 3 questions. 1, do you need a static income every month? Because trading income by definition is dynamic. You might do very well a month, you might not do that for the other month, right? First question I would ask myself is that, do I need a lower threshold of income every month? Or do I have enough savings to backstop that if that happens? If the answer to that is yes, I wouldn't say I should do trading full time. Second is, do I have an edge in trading that anyone else does not have? Am I very good, much better at quant than anyone else? Am I much better at doing fundamental analysis than anyone else, right? When you apply for a job, you can't just apply for any job that you see on LinkedIn, right? You see whether this is something that you'll be able to be good at, and then you do very well in the profession. If you're better at that than 90% than the rest of the world, right? That's a typically valued a career. So I would treat it just like any other career, and then look at it that way. The third question I would ask myself is, will I enjoy looking at numbers day in, day out? Trading full time, having someone who has done it back in the day, can be very exhausting mentally, even when you're profitable, right? Because you're looking at numbers day in and day out. If the answers to these three questions are in favor, then you can consider trading all day. Now, once you do make that decisions, there's two ways to do this full time. One is to do it with your own capital, which means you create your own account equity. You let's say fund your whatever trading account with $10,000 and then start trading and eventually grow it, and also take some money out every month to survive. The other way is to join a trading firm, which is joining a capital investment firm, a capital management firm, and trade on someone else's trading desk, which is how most of the people like me got our starts, where we work for a bank or work for a financial institution and trade it on their capital, right? So that also teaches you a lot of discipline. You have to trade within specific conditions. There are market hours. You don't trade outside the hours. Your boss sets your limit on how much money you can trade, how many losses you can take, etc. That's the second way to do it. So I would say, if you're going to do it, you can do trading as a full-time job if you fit these three criteria. But then I would say, better to start at a capital management firm if you can source that opportunity before starting out on your own without any mentorship and guidance. But my shortest answer is probably, for an average person with no previous trading experience, probably no.
Okay. Thank you very much.
Thanks, Ijoma. All right. I have another question here from Tob Ross that I'm not quite sure I understand. So I'm going to bring Tob up. Is Tob still?
This is a question. This is a question specific to Pillow.
Okay, Tob.
Right. Ross, you can go to the app and there's a interest calculator on the home screen itself. Just scroll down twice on the app and you'll see the calculator there. It's 14% per annum, but you get paid in daily interest. So calculate the principal you have put in, multiplied by 14, divided by 365, you will get the daily interest that you want.
Okay. Thanks, Arindam. Next question. So I see one here that, given that crypto will still need to be converted into fiat currency, is there a risk of punishment by regulators like CBN, EFCC? Who wants to take this?
Come again.
So, given that crypto will still be needed to be converted into fiat currency, is there a risk that punishment will be levied by regulators like the CBN and EFCC?
Why would they punish?
Yeah,
why would they punish or because of conversion? I don't think anyone does that, except if you engage in a fraudulent transaction using cryptocurrency, and the investigation rolls out that you did that. So I don't think that using cryptocurrency attracts any punishment from anyone, except you're a fraudster using it for a cover-up. That's all.
Okay. Next question. I have one here from one of the pre-submitted questions we have. So, did someone want to say something? Sorry. No. Okay. What are the things to look out for in crypto before investing in a coin? I think this is a very superb answer, especially for beginners that are looking to start investments. So, what are the things to look out for before you invest in any coin? Deborah, maybe.
All right, I think Chris answered this partly. So, I mean, starting from what's your risk appetite? Why do you want to invest in crypto? Do you want to flip for quick profit? Do you want to hold long term? Because that way you can identify what cryptocurrency you want to invest in. I mean, also looking at, Chris will probably need to help here because I'm not a trader. But I mean, to the best of my knowledge, research is very important, right? What's this crypto? Why does this cryptocurrency exist? Because cryptocurrencies, I mean, the last time I checked, we have over 10,000 cryptocurrencies in the world. So how do you choose what cryptocurrencies to invest in? How do you do your research on knowing, what this cryptocurrency is about? What's the use case? What's its value? Because there are tons of cryptocurrencies out there and you don't want to get burned. So it's important to always, stay educated. And that's why you have platforms like DABA, you have, educational platforms where you could learn about cryptocurrency trading and how to get in.
Okay, Chris, over to you. As somebody who has done this a lot, what should people be looking out for?
So there's a ton of fundamental and probably technical analysis that's involved before taking a decision on should I buy a coin or should I not buy a coin. And I know that some people still say, but we did all these analysis and things like Luna, FTT still happened. Of course, they also showed their own red flag before their fatal dips and all that. So there's the team to look at. Like Deborah said, there's the use case to look at. There's the industry needs to look at. Okay, what's this going on? Is it something in DeFi? Is it data? Is it a storage and all that? And you see, sometimes in the cryptocurrency market, some tokens are run because of certain narratives that come around it. For instance, when this whole centralized exchange issue happened with FTT, people started saying, so there's this narrative. Those of us in crypto know that they start bringing the narrative, centralized wallets. So the next thing is remove your money from exchanges and put in things like, so it's not like, okay, coins that have wallets like SafePal, Trust Wallet tokens, they started going short. In the last 1-2 weeks, we've seen prices of these decentralized wallet coins, C98, SafePal, TWT, doing over 50% in returns in like 1-2 weeks, okay, because of a narrative that centralized exchanges are not safe. Even 2 days ago, MetaMask released something about them tracking your IP when you use their wallet, and you could see the gens going into SafePal wallet, and in like 2 hours, we could see SafePal SFP having a 10% increase in price. You see, before you go into buying or selling, you must first understand the narrative and the whole concept of what this market is all about. It's a crazy market. It's a market where somebody can just throw in a tweet and say, oh, I forgot that there's this and that Twitter has invested in Dogecoin, and the next thing you could see Dogecoin now. So there's fundamental analysis. The moment Elon Musk finally sealed up his acquisition of Twitter, and people know that, oh, Elon Musk has his affiliation with Dogecoin, we could see the price of Dogecoin going from 0.08 to 0.14. I think Dogecoin did about almost close to 100% within that period, because Binance was also invested in Twitter. So there's fundamental, there's also a place of technical analysis, and there's a place of you having those narratives that can drive a head mentality, like we saw it last year. People started talking about the whole NFT things, and every coin related to NFTs were one of the biggest performers in the cryptocurrency market last year. So you must know technical, you must know fundamental, you must know what's the team token, you must know the supply, you must also know how to use platforms like CoinMarketCap. Who are the investors backing them? Is this thing oversold? Has it been overbought? What's the market cap like? For instance, anybody this is not a financial advice though, but somehow, some people may be comfortable investing in low market cap coin. There are also those who are mid cap size coin. There are those who are large cap size coin. For instance, there are investors who feel comfortable no matter how low the price of your coin is in terms of market cap. The market cap of your coin can be $10 million, $20 million. Some investors don't want to do anything with it because to them it's not really, really liquid. While some investors are okay with, Ethereum is currently $1,200. I don't mind waiting the next 1 year and putting maybe $50 million, $10 million, $20 million, $1 million in Ether. And it's a high cap coin and I'm just looking for something that moves from 1,200 or 1,001 to maybe 1,005, and they're okay with that. Okay, so there are a lot of factors to look at, and that's why crypto trading and investing on its own becomes a full curriculum and course on its own. Like Deborah said, that we have at DABA. It's called the Trade and Make Money course. So somebody who wants to really go into trading will not just have it as a let me just have it as something I can just ask the question from the side and take a decision. No, if you're going to do that, then you really are not ready. You're not really going to be a good risk manager. You're not really serious to get the gains, okay, and go away from the kind of risk in that market. Because I must tell you, even as experts in the market, we still have our own share, like I said earlier on, of the kind of losses we also take from the market. So it's not something that is so rosy. It's also for you to look at it. And to be sincere, the gains are there. Honestly, exponential gains we've seen, but at the same time, you must invest your time in getting that knowledge, because crypto trading and investing is a skill. The same way you take data science, the same way you take computer engineering, the same way you take software engineering, the same way you take any other skill, is the same way it is to be a trader in the cryptocurrency market. So these are the things you look out for before investing. There are lots more, but of course, isn't something that everything will be covered in a conversation.
Okay. So another question I'm seeing here is, seen as financial fraud is widespread in sub-Saharan Africa. I think it's widespread everywhere, but let's not go into that. Seen as financial fraud is widespread, how should crypto transactions be regulated to mitigate this? Who wants to take that? Arindam,
I'll take that, Timmy. But before that, for the last question, I'm concerned the person who asked the question about what to look at a coin before investing is a beginner in the crypto space. So here are 3 tips for you. If a friend sent you a link to a coin asking you to invest in it, you will not invest in that coin. If the coin sits below 50 ranking on public charts, CoinGecko and CoinMarketCap, you will not invest in that coin. And third, you will never borrow money to invest in a cryptocurrency. After that, you can follow all of the advice that Chris has given, but do not borrow money, do not invest in something your friend has told you to invest in, and do not invest in small cap cryptocurrencies below the rank of 50. You will lose money in most cases. Now to answer your question around cryptocurrency transactions and regulations. So first of all, transactions should be regulated. This is a no-brainer. Why? Because regulations exist to protect consumers, right? Entrepreneurs and innovators, the primary focus is delivering more value. Regulators' primary concern is people should not be rioting on the streets because they lost money, right? So we need some level of regulation and some level of capital controls to step in across any industries. That should be true. But the way you think about it in cryptocurrency transactions has to be slightly different. Cryptocurrency transactions are fundamentally validated by miners. The big disconnect right now with the regulator is that till date, the central bank is the one validating the transaction. Look up on a 1,000 naira note, and you will see that the note actually says the exchequer, the central bank, owes the owner of this note 1,000 naira. That's what a banknote really means. Similarly, your card number on your credit card or your debit card just means that you now owe this person, and the settlement happens much later. But in cryptocurrency, transactions are settled instantly, which means there's no refund or appeals process, right? So there will be some level of comfort that will be built with the fact that understanding that transactions, the settler of transactions is not going to be the regulator of transactions. Today, the settler of transaction and regulator of transaction is the same body. But right now, the difference will be the settler of transaction will be the on-chain miners and validators, but the regulator will be the local entity. So I think going forward, both the CBN and the SEC in Nigeria have major roles to play going forward. And, in our interactions and, all the industry leaders interacting, we do see a lot of positive discussions in the right direction on how to use this as a constructive tool for empowerment of finances within the within the continent, right? The important thing that I believe the regulators have also understood is that the first wave of technology entrepreneurship was owned by the US. Right, when they were building Airbnb and Amazon, and we didn't have access to the internet, right? So there was no way we could have won. But this time, the playing field is a lot more level, which means they also agree that regulations cannot be the backstop, the reason why we did not win against developed countries in building this technology and this infrastructure. So I think the visibility is there, but fundamentally there will be a bifurcation between transaction settlement regulatory entities, primarily CBN and its derivative entities taking drive, and then transaction regulators, which will be, for example, Prevention of Terrorism Act, so that you're not funding terrorist counterparties. Then Prevention of Money Laundering Act, the PMLA, right, which ensures that the source of funds is not from a illegally laundered funds and things like that, right? So those things will step in, but those will be taken up by separate law enforcement regulatories, and the specific transactions will be under the purview of the CBN. That's how I see this evolving.
Okay, thank you for walking us through that. I have another question here that I'm going to hope we can ask live. BTGD has a question for Chris. I'm going to bring him up so that he can ask his question live. So BTGD, could you ask your question?
Yeah, good afternoon. Good afternoon.
Hi.
Yeah, there was around 2020, I was using I think blockchain wallet. I was going to transfer like $500 to another account. Of course, I checked the account and I confirmed that everything was fine. But after sending, I realized the destination address changed, and I think it's just similar to what you explained. How do we really get ourselves against such occurrences? I have to change my wallet after that, so I don't fall into such situation anymore. But is there any way we can avoid such happening during our transaction? Do you understand?
Okay, so I think for me, I had to be super sure again. That thing just changes when you click, copy, and you're pasting. So sometimes these wallet addresses are sent to you by WhatsApp. They're sent to you, probably you picked it up from Facebook or something. I really can't get how exactly I picked that wallet address then, and it changed. So yeah, a few security tips I give people, I share. Do not use your mobile phone, especially when you're doing cryptocurrency transaction. If, for instance, maybe I'm in somewhere I could use a public Wi-Fi, I don't connect with a public Wi-Fi on my phone, especially when I have crypto transactions with it. So I don't use public Wi-Fi, because I remember that day, my laptop was actually connected to a public Wi-Fi in that environment. And I'm not saying that may be the cause, but some of the things I share with security tips not to do. And it's also known in the crypto industry that you don't use public Wi-Fi for cryptocurrency transactions, okay? You could be spied upon, you could be hacked. Even normally in your database, if you're using emails and all those things, public Wi-Fis are not secured. I think that's one of them. I know that day I was using the public Wi-Fi on my HP. I wouldn't say you should start doing this now because of that, change your laptop, but I think I got more secured using Apple products, a laptop for that reason, instead of using my MacBook, instead of using the same HP. I think there was a vulnerability or something I can't really explain, but I know those were the things we were saying way back then, 2016, 2017, that caused those issues. And which one again? Do your cross-check all the time. Do your cross-check. I think that these things are maybe secured now, because I'm not sure I've had any issues even on using Trust Wallets, sending, even though I don't use blockchain again for some reasons. I stopped using blockchain for a long time. But I think that with Trust Wallet and co, a lot of things are more secured. 100% not guaranteed, but stop using public Wi-Fis. Know where you're getting that wallet address from. Do your cross-check again and again before the final sending, so that it doesn't just change while because you may not even know what's up, and you just paste and it's already changed while you pasted it. So you do your cross-check again before final sending. I think these are some of the security measures one can actually still take to avoid those things.
All right. Thanks, Chris. Thanks, BTDG. Deborah, I have a question for you here from one of our listeners. So the person says, crypto and blockchain in general has a scalability problem due to its limitation in its capability to handle large amounts of transaction data. How can businesses innovate around this challenge?
Yeah, that's a great question. And that's a very wide topic as well. There are already innovations and solutions already being put in place to tackle the scalability challenge. We have layer one solutions like sharding, where you literally just split large databases into smaller compartments to improve performance and also speed. We also have layer two solutions, and I mean, they're pretty much just side chains built on top existing chains. And what that does is it helps to improve transaction efficiency of existing blockchains as well. So there are already innovations happening around that. I mean, scalability is still a very huge topic, but I think that we're getting to a reasonable point where that's already getting solved.
Okay, thanks a lot, Deborah. We have time for one more question, and I'm going to we have 6 more questions here, but I'm just going to pick one and we'll go from there. So an anonymous attendee asks, given that education is still needed in the crypto space, how do you think the underbanked and underserved will get this education when they are not ready to accept regular fintech apps?
They should eat first. I said this earlier on. You see, let's be pretty honest with ourselves here. Let's be pretty honest. You know, I keep saying this. We have one of the challenge we didn't talk about earlier on to the adoption of crypto is inability for people to even a large number of our masses to use regular applications. I'm saying it. I run an edutech company, and I'm in media, I'm in edutech, I'm in crypto, and my school DABA currently has over 50-something thousand students. And I can tell you that you don't want to hear the kind of things we see when we tell people to come and enroll for simple things like online course. It may not be part of this discussion, but let me use that to address the problem. Okay, I've been teaching, I've been doing online education for a long time, and I can tell you what we are facing deep down in this market. You could see people who are just, there are people who still don't know how to use applications like Zoom. There are people, maybe TechCabal has a very, very enlightened audience. Nobody disturbed you here saying, how do I connect? But I'm someone who has organized events, and you'll be in the comment section and say, I can't hear what you're saying.
Like that's shade, like you're shading our audience, Chris.
No, you guys are top notch. See, now let me use a little bit of history. I'm someone who at the age of 6, 7, 8, my own late father exposed me to the use of computer technology early. I had the palm top when I was small. Now, I'm not saying this is, I'm going somewhere with this. So someone don't say, oh, you were getting, no. Then there's this generation that was not social media. They finished school waiting for WAEC results or JAMB results or university admission. And the first thing was, after school, go to computer center and learn basic computer technology, basic computer appreciation, Microsoft Excel, Microsoft Word, computer appreciation. Okay, those are the things our parents would tell us to do then. And you are waiting for JAM. And while you're there, you've learned computer and you already know how to use computer. You know how to do Mavis Beacon. You know, there is a generation that missed that training and they are used to mobile phone, Facebook, Snapchat, Instagram, and they don't know how to use computer technology. That gap has not been filled. And that's why even next year, our platform DABA, we're launching a free 1 million free computer appreciation free class online. Come and learn how to use basic things like computer, how to use the internet, and how to use all these things. Okay, so if you consider these things, these are big barriers. When somebody is telling you, you're putting an advertisement for something and you're saying, click this link, and somebody is saying, I am interested. We're telling you the instruction to do so. The IQ, the illiteracy, the literacy level, with these things are factors. They are factors. I'm telling you, they are factors.
Which is very motivated.
You just said something about they can't even use basic fintech apps. And we keep having, sorry to say this, fintech companies using, we want to underbank. Stop that word. We want to bank the unbanked. Those words should, anyway, probably easy to raise money and all that. But the question is, what is that market? What is the value of that market on its own? It's a big conversation we are not having. Education level, the ignorance level, the literacy level, then you now call things like IQ. So you now have to now teach people basic things from the scratch. Some people are even used to online learning. Some people tell you, see, this Bitcoin thing you're telling me, I want to see you in physical. I want to see you in person. You must show me I'm like, how do we show thousands of people? You start traveling to Adamawa, another. In short, let me tell you the level I've gone in crypto education. I've gone to the level of teaching people in Igbo language. I'm an Igbo man, teaching people in Igbo language. Then we've organized events in places like Kano, where I have to teach in English and I had to get an interpreter to share it in Hausa. Okay. And like that, but if something is missing, it is missing. And instead of us trying to complain about that missing stuff, we should start fixing education. We should start fixing early access to usage of computer, how to use the internet and those things, so that we don't have people who just come out and we're trying to force them to use application. Meanwhile, we should be going to take them back to learn the basic things you should be using first before you don't talk. And that's why I said, see, let them eat first. The person who has not eaten should not be thinking of, he wants to do Bitcoin, crypto, all those things.
It looks like Deborah wants to say something though. Like she has been waiting a while. So let's hear from Deborah.
Please go ahead.
Yeah, I mean, for someone who has over 50,000 students, I understand his frustration. And so, I mean, just on a brighter side, right? I mean, yes, so there are probably other reasons why people do not use fintech apps. I mean, the high level of illiteracy is one, and I think that's already evident, and Chris has spoken greatly about that. But then again, could it be because, okay, these guys charge, ridiculous fees for transactions, or there's some transactions that are actually not possible, versus carrying all these transactions on the blockchain. So I also think when people are able to understand, if they can understand crypto and blockchain from a utility perspective, how does it impact me? How can I use this? How can it be part of my day-to-day activities? I think that would also help in driving adoption of cryptocurrency, because I mean, there's this recent report that came out on Chain Analysis that shows that crypto usage in Africa grew over 2,600% in 2022. So there's some adoption happening, and that report also shows that, I mean, more than 88% of those transactions are cross-border payments. So again, it just all depends on where you see the value, if you think crypto is valuable for you. And I think that's also what a lot of tutors, educators are preaching. What is the value in cryptocurrency beyond just flipping and trading and watching prices go high and low? What are the other things that you could benefit from using cryptocurrency and the blockchain technology? Thank you.
Thank you so much, everyone. So we have officially run out of time for our Q&A session. And right before I ask our speakers to give us their final thoughts, I'll just like to tell everyone that we have a post-event survey in the chat box. Usually at the end of these events, they give you snacks and hors d'oeuvres, but we don't have hors d'oeuvres. We have a survey for you. So eat our survey. And please fill our survey and tell us how we're doing at TechCabal and how we can make this event better for everyone. So I'm going to go to our speakers now, who have been wonderful and fantastic, and they've shared some insightful tidbits with us. And I'm going to start with Arindam. Arindam, are there any final thoughts you want to leave us with on everything we've spoken about? I think you're muted.
Right. Thanks, Timmy. See, broadly, the future of digital assets and cryptocurrencies in Africa is very bright. Yeah, my concern is also that we've been saying that for 5 years. Right. We have increased P2P volumes in the last 40. You said 40%, is it, Timmy? In the last few years, etc. The user experience of P2P has been the same. The user experience of most exchanges have remained the same. I think it's also time that technology also steps up and sort of create solutions that can be used everywhere. Right? When you do a bank transfer for 10,000 naira to a shopkeeper for purchasing some groceries, you don't really know how the banking system works. So let's not expect users to learn how blockchain systems are going to work and how they technically work and all that. Just create good solutions. So I think the time is now to sort of, for African entrepreneurs and also African users, to step up and say, we're going to use this for what it was meant to do. And we'll have a bright future for digital assets ahead. I also believe the yardstick of how we'll measure digital assets adoption and digital assets proliferation in Africa will change. We'll move from how much is the price of a currency going up to how many people use the currency and for what do they use it, right? So the yardstick will change from price of assets to utility of assets. But you know, I do wish all cryptocurrency entrepreneurs, digital asset entrepreneurs in Africa all the very best. We have a long, very difficult journey in front of us. You know, in terms of user adoption, in terms of regulatory battles, in terms of education, in terms of community. And I do hope that, you know, we'd be able to create a bright future for the continent going forward. But yeah, thanks, Timmy, for putting this together. Thank you to the other panelists for taking your time out and speaking on this. It was a lot of fun, and I look forward to speaking with the crowd next time. And some of the questions were very, very thoughtful. While the rest of the panelists give their closing remarks, I'll continue to answer these questions over chat. I'll try to do as many as I can while we have this session live. Thank you, everyone.
Thanks, Arindam. Chris, closing remarks from you.
Okay, so I think that a lot of people, even with the recent thing we've seen in the cryptocurrency market, this is not like the first time, even though this is one of the biggest hits in the cryptocurrency market. But this is it for me. If you're going to play in the cryptocurrency ecosystem, I want us to have a long-term perspective. When I got into crypto, the first thing I told myself, I came into crypto at a point in time where I was looking for the next big thing to do with my life and all that. I was doing certain things, but I needed to take on a new challenge, and crypto became that challenge for me. The first thing I told myself in 2016 was that I'm going to play in this industry for the next 5 years before I can count and say, okay, I've done well, I've not done well. This is the verdict I'm placing on this industry. And 5 years after, in 2021, I made another commitment to myself, and I said, 5 years again, I'm going to play here. I'm always that guy who wants to play long term in whatever I venture into. If it's a relationship I'm building with a company, with a person, with my network, I like to evaluate it on the long term. And so we should stop using short-term gains or losses to actually just give our final verdict about the cryptocurrency market. If you're going to play here, play for the long term. There's a lot of innovations that will happen. There's a lot of challenges that will still come. And I think that for the challenges that still come in the industry, it gives us a way to go back and harness how to build, how to be more innovative, how to be more transparent. And of course, even with the recent things, it has shown that it's really not about the technology, it's also about humans and greed or their test for innovation or for problem solving and all that. For me, I'm still dedicated to making sure that the entire cryptocurrency thing still gets that mass adoption. And education is one of the biggest tools I'm using, even at our platform, to also drive this mass adoption. Crypto has a future, nonetheless. Crypto has a future, and maybe beyond just this market, beyond just price going up and down, beyond all that, even though I know that that's one of the core focus, will not take away from the market, because this is one of the things they use in valuing the entire market. So it's a $2 trillion market, it's a $1 trillion market, it's a $800 billion market. Beyond all that, I know that in full force, one time, a time will come where our unborn kids or our children will no longer use a bank or walk into a bank. And that's the future we are going to. And that's what crypto will also help us to. Thank you.
Thanks, Chris. Last but definitely not least, Deborah, can we have your closing remarks or your final thoughts?
Yeah, it's been an amazing session. Personally, I've learned so much as well. So thanks for putting this together. And I think I'll just speak based on some of the sentiments I've seen, based on questions that were asked. I mean, a lot of people seem to be skeptical about the crypto markets, which is understandable. It's bear markets and all of that. But again, what we've also seen, data proves as well, is regardless of the bear markets, there's growing adoption. We see major players coming into this space. So it says just one thing. Web3, crypto, blockchain, the ecosystem is here to stay, right? And I believe that we would see actual widespread adoption when more structures and policies are coming into this space, and we see major players like Binance, Polygon, etc., having high-level conversation with governments, even private sector businesses, etc. So while we shouldn't while we're trying to understand the space, we also need to navigate and explore the opportunities that exist in this space. There are a bunch of opportunities beyond just trading cryptocurrencies. And so again, education is very key. We should remember that we're limited by what we know. So it's important that we keep ourselves informed and well educated. That also gives you a really good level playing field to navigate the crypto space. Join a community, take a course, do your own research, attend sessions like this, listen to key leaders in the cryptocurrency space. That way you're easily exposed to the opportunities that exist in the blockchain ecosystem as it evolves. But yeah, thanks a lot for the session. I had a great time.
Thank you, Deborah. Thank you, Arindam. Thank you, Chris. And thank you to everyone in the audience for sticking with us through this conversation. This has been TC Live, TechCabal Live, in partnership with Pillow Africa. And this whole presentation and event was organized by TechCabal Insights, which is the events, research, and data analytics arm of TechCabal. They're an African-focused digital economy consultancy that leverages big data to help startups, investors, ecosystems, and players on and off the continent to answer specific questions and implement key interventions. This program was brought to you by TechCabal. Thank you for sticking with us. And if you've not filled our post-event survey, please go to the chat box where my colleague Eniola Shoson has dropped the link and fill our survey. If you would also like to receive insights on tech in Africa and basic happenings like startup funding and even things as simple as DSTV increasing their prices, please sign up to TechCabal Daily, which is our daily newsletter that provides daily insights into technology in Africa. And you can join over 120,000 people who are on that newsletter and receive info. Thanks again for joining us. Thanks to our guests, and we'll see you next time on TC Live.
Thank you. Bye, everyone.
Bye.
Thank you.